Hey, hello everyone. Thank you for taking the time to join us for this Scottie Resources webinar. My name is David Erfle, and I have been a professional resource stock investor since 2003. Oh, and by the way, any questions you may have while I'm talking here, please submit them, and we're going to do a question and answer after the presentation. I'm also founder and editor of Junior Miner Junky newsletter. And while writing a weekly column for precious metals news service, kitco.com as well, whose website attracts nearly 1 million visits every day. The newsletter was launched in April of 2017 and has assisted hundreds of novice investors in building a balanced and successful junior resource equity portfolio. The Junior Miner Junky service maintains a real money portfolio of about $1 million valuation right now and is completely transparent. Which assists in teaching its members how to carefully construct and maintain a successful junior resource stock portfolio. I invest my own capital in each stock recommended to my subscribers and do not receive any monetary compensation whatsoever from these companies. So in full disclosure, I'm a Scottie Resources shareholder and I do recommend the stock to my subscribers. My subscribers are provided a carefully thought out rationale for buying individual stocks, as well as an equally calculated exit strategy. JMJ also teaches subscribers how to navigate this high-risk junior resource equity sector by incorporating proper risk management tactics. My goal for the past few years has been to carefully construct a retail portfolio. Subscribers are provided a carefully thought out rationale for buying individual stocks, as well as an equally calculated exit strategy. JMJ also teaches subscribers how to navigate the high-risk junior equity sector by incorporating proper risk management tactics. My goal for the past few years has been to carefully construct a concentrated portfolio of exceptional junior resource stocks in the context of an investment time horizon is least as long as one cycle, which I feel has just now begun. During the first phase of the secular bull market in gold that began at the turn of the century, the price of gold increased every year, rising from around $250 an ounce to over $1,900 by September of 2011. It was an unprecedented run. Although the gold price ran up over 675% during this period, the HUI Gold Bug Miner Index went up over 1,800%, while many of the junior gold stocks made early investors small fortunes. After this historic advance in the gold complex, an ensuing 4-year brutal bear market took general investors completely out of the sector, as the global miner ETF GTX lost 85% of its value into the first few weeks of 2016. The short cover reaction to this multi-generational buying opportunity in the mining sector during the first half of 2016, however, produced a 180% gain in the GDXJ, which sucked in new money as well. But this outsized gain was very short-lived, and the bear market continued for most juniors while the miners were bottoming with the gold price. Moreover, when equities were suddenly crushed in Q1 of this year due to government's global lockdowns in their economies in reaction to COVID-19, the junior explorers that consume capital were abandoned by resource speculators once again. Zero demand at the start of the lockdowns pushed all assets much lower, including the entire precious metals complex. For a clear, big picture view of how depressed this mining sector has been in relation to the gold price since making a double top in 1996, the XAU gold ratio is a fascinating chart to follow. Despite gold zooming from $250 to over $1,900 from the year 2000 to September of 2011, the miners have been in a bear market in relation to the price of gold for 20 years since the Bre-X scandal in 1996 into the low of 2016. However, the rush to sell anything with a bid to raise cash hit the high-risk junior sector even harder once the global pandemic began earlier this year. Of course, safe havens fell less than risk assets, but gold stocks were crushed yet again and pushed the XAU gold ratio down to a double bottom by March of this year. Since this double bottom was struck, the index has been rising as the mining complex has reacted strongly to global governments and central banks around the world throwing massive amounts of capital into financial markets to support consumers and the global economy since the crisis began. From sending checks to citizens to processing thousands of loans to businesses, the Keynesian system that began when US President Richard Nixon took the world's reserve currency off the gold standard in 1971 is doing all that it can to survive right now. In response to the crisis, the Keynesian reflationary actions by both the US government and the Fed are leading the way to coming stagflation, and in doing so, all lines that are supposed to separate these two organizations are being eliminated, while the pretense that the Fed is independent of the government has been completely dropped. With the Fed having purchased trillions in government debt in recent years, while continuing to add to its balance sheet, we are witnessing the greatest debt monetization in history. In response to the COVID-19 pandemic, the US government has issued over $3 trillion in fiscal stimulus, and in turn, the US Federal Reserve has increased the money supply by $3.4 trillion from January to September of this year. After a slight decline in June and July, the Fed's balance sheet is headed upwards again, and this time to around $7 trillion. These global central bank Keynesian reintroductions of highly accommodated monetary policies have only strengthened the long-term investment outlook for gold. Due to these unprecedented inflationary actions by global governments and central banks, we have now reached a scenario in the marketplace where if the economy does poorly, gold does well as a safe haven. And if the economy recovers, gold will also perform well due to inflation concerns. The current transition period from economic destruction to the destructive inflationary response by policymakers has created the perfect storm for junior precious metal stock speculators. Although the precious metals junior equity carnage was swift and painful earlier this year, the meltdown of this tiny sector has created incredible buying opportunity and quality juniors for investors as the final washout of an 8-year bear market ended and a new mining cycle has most likely recently begun. Many higher risk early stage juniors that were left for dead even by resource investors did not begin to recover with the gold price in earnest until July of this year, when the GDXJ broke out of a 7-year base. The extraordinary events of the first half of this year only reaffirmed the bullish outlook for gold and especially the undervalued junior sector. The remarkable disconnect between Wall Street and Main Street has continued into the second half of 2020 as markets have rallied sharply due to the unprecedented amount of liquidity injected. Meanwhile, most investment funds remain underweighted in junior precious metal stocks. Moreover, the junior space has recently seen a huge influx of capital as the higher risk developer explorers are being cashed up further to de-risk their projects. The value placed on the earlier stage of juniors has also been increasing recently as they emerge as the primary source of new reserves for majors. Although phase 2 of the secular gold bull market began in late 2015, when the safe haven metal bottomed at $10.50 per ounce, retail investment did not begin to return to the miner space until gold broke out in 2019. And once these generalist investors began coming back into the gold space, they did so through ETFs such as GDX, GDXJ, and GLD. While most grassroots exploration projects have been on hold for nearly a decade, gold's recent rise above $2,000 an ounce has made global headlines and has only recently brought back risk capital into the higher risk junior space. The generalist investors that left this sector in mass 8 years ago are only just beginning to return. With the mining complex in the process of consolidating recent gains, quality junior precious metal stocks still have plenty of catching up to do when a new solid floor is established in the gold price where once was major overhead resistance at $1,800 an ounce, which I believe is in the process of taking place. While hundreds of millions of dollars have been flowing into junior explorers and developers since COVID-19 crisis began, numerous fully funded exploration and development programs are now underway. I expect the news flow from drill results and corporate updates of these programs to increase in the fall. Once the first new major discovery is made, big money will come into high-quality junior gold stocks, enabling valuations to rise across the entire junior resource complex. With phase 2 of the secular bull market in precious metals now underway, along with the new mining cycle, cashed up smaller cap juniors in the sector, such as Scottie Resources, are now poised for significant value appreciation. The undervaluation of the junior space in relation to gold, which is in the process of creating a new floor at $1,800, is presenting an opportunity for contrarian investors to get into this undervalued sector before the coming wave of mergers and acquisitions, along with the coming of larger retail investment participation. Thanks very much for listening to this intro. And here is Scottie Resources President and CEO Brad Rourke, who is joined by Scottie's Vice President of Exploration, Thomas Mumford, to give you a detailed presentation of the company. And again, please feel free to submit any questions you may have about the company during this presentation.
Thanks, David. Believe it or not, just like 30 seconds ago, we lost Brad. His house lost power, and so it's just me right now until Brad can get back online. But yeah, happy to talk to you about the Scottie story today. As you know, we're located up in the BC's northwest quadrant, up in the Golden Triangle. We have been working this project for, well, Brad started 5 years ago, and I've been with the company for the last 3 years, and we've really started to push the project along. I will be making some forward-looking statements, and this presentation is available in large part on our website. This is just an excerpt from that. Go ahead. First thing we'd like to highlight, there's 3 big things I want you to come away from this presentation with. That is our team, our jurisdiction, and then the geology that we have, all 3 which are phenomenal. Our team is kind of at the helm. We've got Brad Rourke, CEO and president. Brad's been a key player in the project. I mean, he came on as just an investor about 5 years ago and ultimately took the whole project over. He's had some major wins in the energy side, and he had a lot of experience with the service sector of the mining industry over 25 years ago. And so this is his first big junior mining play since then. Myself, Vice President of Exploration, spent a lot of time in academia and doing exploration across Canada and a lot of high value gold projects. And then we have Raheem on the corporate development side. Been doing a lot of portfolio management over the last 25 years. And then we've got Ernie Mass. So this was the old COO of New Gold. He also ran this, he was Minera Panama with the Cobra Panama project down in Panama. And then we've got John Williamson as well, a big junior mining guy. Right now is the president of Benchmark Minerals. Also was involved with Kaminak and at Committee Bay in Newfoundland. And then Steve Stein, an accredited board member, was the founding member of the Black Diamond Camps, which was a $2 billion entity as well. Next. Scottie's land position is largely focused in the southern lower half of the Golden Triangle. Our key asset is the Scottie Gold Mine, which was a past producer, ran in the early 80s for about 3.5 years. Its mineralogy is a little bit different than many other deposits in the area, with the exception of the Snip Gold Mine, but it's largely focused on purite pyrite-rich veins with very high grades of gold. It's a all-weather road access site, so we do drive to it. This road was operational all winter long. It also serviced the Grand Duke mine that was in the area as well. The Scottie Gold Mine itself didn't shut down due to lack of ore. In the early 80s, gold went from $700 to down to $300 an ounce. But at the same time, the mine had a $20 million facility with the Royal Bank of Canada. And unfortunately, early 80s, they were running interest rates extremely high. It was about 22% for the mine. And so when the gold dropped, they weren't able to keep up with the payments and make this mine economic. But the ore was there. The cutoff grade for the mine itself was 10 grams a ton. And the average recovered grade over the full lifespan of the mine was 16.2 grams a ton. Big part of this project that makes it really appetizing now is one of the biggest expenses at the time was the operational cost due to the diesel to run the mine. But just in the last 5 years, Pretium has put in a power line to power their Brucejack mine, and that power line goes within 1 kilometer of the Scottie Gold Mine itself. So major access to power there, which would dramatically reduce the operation cost for the mine. The tunnels, the rock condition is phenomenal. You can still put the locomotives on the tracks that are in the tunnels. There's 7 kilometers of access underground. And then we also have a historic tailings pond or piles on site, which actually have considerable grade in them, which I'll come back to later on in the presentation. Next. So our land package is quite substantial, and Brad started acquiring pieces of land to add to the original 400 hectares that the company started out with. So a few years ago, when I first came into the project, the main asset to the project was only the Scottie Gold Mine. And the Scottie Gold Mine itself only covers about 400 hectares of Crown grants, which are a little bit separate from mineral claims, but it's kind of tied to the original mine permit that the Scottie Gold Mine has, which is still an active permit, although we're an exploration company. So the Scottie Gold Mine original 400 hectares was a little bit limiting to show the scope and the potential of the project and the geology of the area, really. And so Brad and then later myself, when I came into the project, really set out on improving up the land package into what we have now, which is a district scale piece of land in the Golden Triangle. So we have now over 25,000 hectares, and we've done a number of transactions, I think 12 in the last 5 years to assemble this land package. And a big takeaway here is almost everything is entirely paid for and 100% ownership. We only have one small bit of land that requires $50,000 a year for the next 3 years, and then we have 100% ownership of the prior property. And most of the claims don't even have an NSR, and those that do is 2 to 3%, of which you can buy down to 1%. So extremely palatable in terms of the NSR available on the lands that we do have. And I mean, this is a big package of land, and we're primarily just focused on the upper portion around Scottie Gold Mine, but we do have a lot of interest in the other piece of land that lies just to the west of, or the east of Stewart, which we call our Cambria project. That's much more enriched in base metal values, so lead, zinc, as well as very high grade silver. And then that package of land is obviously sandwiched right between Ascot and Red Mountain, which is quite interesting there. And all the properties do touch Pretium to the north. So those are the two biggest players that we have in the area. Is Pretium, which is a market cap over 3 billion, and then you're looking at Ascot that has a market cap of 300 million, and they're just about to turn on a mill. So it's a 2,800 ton per day mill they're forecasting to turn on, and once that activates, they've got to keep a supply of ore going through that mill, and they're going to use a hub and spoke model. So they're looking to supply that mill with 4 different mines. And we're right on the road. We drive by Ascot on the way to us. So we have a lot of optionality in terms of major exploration companies in our jurisdiction alone. Next. So this is an image of the original 400 hectares of the Scottie Gold Mine. On the left, you can see the massive amounts of glacial retreat that's occurred since the early 80s when the mine was in operation. And just to the left of the page, you can kind of notice on the way up the hill, you can notice the change in vegetation there. And what that's associated with is the drop in the lake. So this lake used to be completely flooded, this lake bed here. To the left off screen here, we have the Salmon Glacier, one of the largest glaciers in North America you can drive to. And that used to dam up the water of this lake. And eventually it actually dropped due to basically the whole glacier lifting up and yaw clopping. We had a catastrophic curve. And so this lake used to be about 30 meters higher than the tailings and right up to the edge of the mine at base. And so when the mine operated, it was accessible to basically operate on the lake bed. So with the lake bed dropping, it's provided 2 opportunities. One is we now have the ability to drill on the lake, and the other is that we have the opportunity to look at the tailings that are now at surface that were always subaerial before. And the reason that it's interesting to drill on the lake now is if you see the four triangles going up the hill there, the 28, 29, 3000, and 3600 level portals. So we've got the Scottie Gold mine, which is the historic mine there, and that consists of a number of parallel vein systems. We've also got the Blueberry and the Bend vein, are old known deposits as well. And so these all have historic drilling on them with exceptional grade. And this is what we drilled last year. So at the end of last season, we actually drilled those three targets. Everything in the hash area we actually had permits for. And in those little hashes, those were the three major targets that we went after. The targets just outside of that, the Domino and the 6 ounce that you see there, those were outside of our claim permits at that time. We had just acquired the land that surrounds that in April last year. So we didn't have drill permits when we went in. But one thing I'd like to point is that, you know, these are exceptional grades for these three targets. And our drilling last year actually measured up to what was historically found. So with the Scottie Gold mine itself, everything that has an asterisk on it, those are the grades that we came out from our drill program last year. And that was only a 2,000 meter drill program at the very end of the season last year. So 11 over 11 basically for the Scottie Gold mine hit. That's exceptional because this is a hit on the down plunge in front of the mine. So basically as the M zone plunges into the earth, we stepped out 50 meters in front of that and showed a major extension to that major panel of ore. So when the mine shut down, basically they had only mined a vertical panel of about 40 meters width with a vertical extent of about 250, 275 meters. And so we basically doubled that extension with one drill hole, really showing the potential for that. The Bend vein itself, I mean, it occurs in a bend in the road. So this is an at surface target. That intercept of 73 over 4.28, that occurs within 25 meters of the Earth's surface. So it's very easy to access and to drill that target. The unfortunate part of that is the historic drilling, we didn't have any of the core and all the drill collars have been scraped off by the road when bulldozing it. So we drilled a confirmation hole down to test that historic resource block and came out with the grades that we were expecting and hopeful, and we've continued exploring around that and stepping that out. The Blueberry vein, we were targeting the proper Blueberry vein, which occurs at the interface between a mudstone and an andesitic unit, and we were testing it deeper and deeper, and we actually hit a splay off of it, more of a disseminated mineralized zone last year that was completely surprising, much earlier in the hole than we were expecting, and that ran 7.44 over almost 35 meters, and that's about 60 meters depth. So that's another near surface target that we have at the Scottie Gold mine. Next. So this shows some long sections from the Scottie Gold mine itself. So like I said before, it is a set of stacked veins. Now 95% of the ore production for the Scottie Gold mine came down to the M zone. And so when we drilled that 11 over 11 hole last year, we're basically drilling down in the area where it says open at the bottom of that extension. And all the green is the workings. There's also parallel to that is the N zone, and then the O zone and the L zone. And the O zone is interesting in one that it's such a super high grade, I mean 107 grams or 4.18 meters, exceptional grades. And we actually drill tested that lower extension, that primary plunge control this year, and we just released that news result, which I'll talk about in a little bit. But that's the O zone, and it has a lot of growth potential for us, and it's parallel and about 70 meters away from the Scottie Gold mine itself. Next. So here's three sections from our 2,000 meter drill program last year. This was done in mid-September to mid-October. And so we can see the resource block at Bend, very near surface, high grade intercept. You can see Blueberry, we hit the zone well before the contact there between the andesite and the mudstone being on the right and the andesite being on the left. And so that was the zone that we hit that we weren't really expecting, and we definitely targeted a number of holes since we've come back this year for our recent drill program. And then the Scottie Gold mine. So one thing interesting about the Scottie Gold mine is it was a vein that was found on surface, and they began to explore it basically by going underground and mining. So as they were mining, they were just poking holes on production style drilling. So the average drill hole length was only about 75 meters prior to us coming into the project. So even though they had 500 drill holes onto it, the average length was only about 75 meters, which kind of gives you an idea of how they were exploring for this. They weren't really stepping back and looking for a major system. They were primarily focused on just advancing the mine step by step. When we came into the project, realized that underground drilling was still an option, although most of the drill pads that they had drilled from were pretty limited. They didn't have a lot of other options of where you could drill from in the future. So we stepped back and started drilling from surface and drilling longer and deeper holes into the project. And one of the benefits to that is that we get to hit multiple intercepts and down multiple targets because of these parallel sheeted veins. These are substantial veins. The M zone's average width was about 2 meters wide, and it blew out to about 8 meters. And we see other comparable widths on the O zone and the P zone. And so on our way down, we are hitting multiple targets, and then we hit the major pierce point at the end at the M zone, which was 11 grams over 11 meters, or in this slide, it's sliced 25 meters of 7.27 grams. And one thing to keep in mind here, the other underground mines that are operating in the area are targeting cutoff grades around 3 to 4 grams. So the historic cutoff grade of Scottie at 10 grams is out the window for sure. And we could start looking at larger tonnages just by remodeling the entire deposit and doing a new block model with lower cutoff grades. Next. So last year, like I mentioned before, we acquired a new piece of land that kind of changed the game for us. It's called the Summit Lake property, and it surrounds the Scottie Gold Mine proper. And this was held separately from the Scottie Gold Mine for the past 25 plus years. We acquired it basically a little bit of fluke and a little bit of luck and just knowing the right people. It came available. Nobody knew that it was going to be coming available. The gold commissioner took the land away from the previous landowner, and then somebody that we knew staked it and then sold it to us the next day for an extremely appetizing cost. And so once we had that, we had a lot of running room for what we could do with the Scottie Gold Mine and the surrounding lands. And so there was two big things that we were after that first season. We didn't have any drill permits, and this land hadn't been walked since 1991, which presented a few opportunities. One big thing was there was an airborne EM survey, electromagnetic survey, that was done in the early 80s. And that electromagnetic survey highlighted a number of targets. And these targets were very coincident with the Scottie Gold Mine, the Blueberry, and the Venn veins. So we knew that this technique, EM, really lit up over known mineralized areas that we had excellent drill results. But then we had a number of other untested results of these anomalies. So first pass was to go in and look around all these anomalies to see what was there. You know, what's causing this geophysical anomaly? Is it possible that an anomaly is, you know, related to more mineralization like what we see at Scottie? So we focused on those. We also focused on areas where there was massive amounts of glacial retreat. So those areas with glacial retreat basically provided an opportunity to look at rocks that had never been seen before. And those areas were, you know, exceptional rocks that just hadn't been looked at. And so we had an opportunity there to see something that nobody's seen before. And a lot of the area around the Stewart area has been walked by prospectors in the past, and they found a lot of these mineral showings. So looking at new zones definitely provides new insight. And we came away with 5 brand new targets within the area. And the most exciting of those was Domino. I mean, they all have very strong grades, but Domino was exceptional. We took a grab sample of 536 grams a ton. We had a great chip sample. These grades, these are grab samples. So we're breaking these off of outcrop. These aren't just rocks rolling down the hill. These are in spot, very, you know, representative rocks of what the area is. And we didn't know that things were going to run. So these aren't going back into zones that people had already chipped things off of and knowing that there's high grade there. These are brand new zones. And the other feature about Domino is just its position relative to Scottie. So Scottie Gold Mine is just 2 kilometers due east of Domino. So if you, and the major system at the mine is an east-west, northwest trending structure. So if you go due west of Scottie, you'll end up at Domino, but it's also through the mountain. So that previous image we looked at in Scottie, up over the hill, you go over that hill, you're gonna see Domino on the other side. So if you were mining at Scottie and you kept on going through the hill, you would end up on the other side at Domino. which is quite appealing in that if there's a mineralized system that goes through the mountain and outcrops on the other side of Domino, that could be a major continuous structure through there. Now, the reason we were looking at Domino originally was we were following up on that EM in the bottom left-hand part of the image there and walking along the margin of that glacier as it pulled back. And we found a few massive sulfide lenses, one up to 40 meters long and 5 meters wide. And we were starting to focus on that and looking around that. And because that mineralogy matches exactly what we're seeing at Scottie Gold Mine, this really piqued our interest. And the whole structure itself, you know, is striking east-west and it's fairly gossinous near the top of the mountain where the rocks have been exposed the longest. We took a chip sample across the major structure there, and that ran 10.5 grams over 5.3 meters. And interestingly, the two samples on the end of that chip sample were our highest grade samples, indicating that, you know, we weren't out at the edge of that mineralized zone, that it was likely wider than that. And at 5.3 meters at 10 grams, I mean, that's ore grade at surface there. So our program this year was to come back in and drill that to see what else was there, with the aim ultimately being able to show, you know, the grades that we see at surface at Domino, they occur at depth. And then the next part of the story is to tell us, to be able to explain that, you know, or show that these connect up to the Scottie Gold Mine, that the system is much wider and longer than previously expected. So here's a layout of where the drilling was done last year, or sorry, just a few weeks ago. We just finished drilling just 2.5 weeks ago. So there's 6 drill pads that we put onto Domino. What we're looking at there is about 300-meter section of the 700-meter strike length to the Domino structure, and it's about 200 meters in width there between drill pads, between the drill traces. We started by drilling underneath the chip samples. So we put 4 holes off that pad, and those will be the first ones that we release from the Domino holes. We haven't received any of these holes back yet at this point. So we started basically drilling underneath the high-grade structures that we found at surface, including the 536-gram one and the chip sample. We had another multi-ounce one. So basically, you know, we're stepping back and drilling underneath these high-grade surface samples. And as we found the structures that we were anticipating, so we were projecting these from surface, intersecting them in drill core, and what we saw in drill core is what we were expecting, because it was what we saw at surface and in the projections of where we thought we would see it. We step back further and further and steepen the head or move the drill pads back to test further underneath there. So we're going to have a lot of information come back to us about the Domino zone, and we're very optimistic on what we do see from the area. One thing I alluded to before was the historic tailings that are on site. We have 2 piles of tailings that are now exposed at surface that were never exposed at surface. These tailings came out of the underground mill, which didn't operate very well in the first year of production, and then they improved the production from the mill, the recovery from the mill in the later years. So the first year of recovery for the mill was only about 7 grams a ton, and at the end of the 3 years, the total average was about 16.2, which one tells you that the head grade for the mine was very high, probably in excess of 20 grams a ton, but also that there was a substantial loss of gold during those first year. And we see that in evidence here. We see grades up to 6.2 grams a ton in the tailings. We're only able to sample it actually with a hand auger, because right now there's no environmental liability to Scottie on the tailings as they sit there exposed, as long as we don't use any mechanical equipment on it. So the only way we're able to sample it is to use hand augers to go down, and we're only able to get to a certain depth due to basically liquefaction of these tailings at depth. So we've only been able to sample about 3 meters, and that's where we're hitting the 6.2 grams is right at the heart of the pile. So where the first production into the tailings pond or tailings pile would have been. And the overall grade average is about 2.1, 2.2 grams per ton. And the historic production from the mine was about 180,000 tons, although I'm sure we've lost some of that as was deposited into the lake. But we've done some drone surveys over it to estimate volumes, and we've done some specific gravity measurements, and we look like we're in the ballpark of about 150,000 tons of material with some reasonable benchtop recoveries for this. So we do look at this as a potential non-dilutive financing for Scottie at some point to access and to remediate these tailings. Basically, we think we can clean them up or ship them out and you know, make it economic sense to us, but also to improve the environment. And we're in discussions with the government with that at this point. So we'll keep progressing with that as the time goes, but in the next couple of years, we see ourselves potentially monetizing these tailings and doing something for the environment here. Next. In total, this year, we drilled just over 7,000 meters of drilling. We've only released one batch of drill holes so far, and we have a lot of news to come through the next few weeks and months. We also flew a new airborne electromagnetic survey. So like I said before, like this seems to be really highlight what the mineralization at Scottie is and the Blueberry and the Bend. So we're hoping that maybe doing a different EM style. So this one will be an AirTem or like a ZTEM type airborne magnetics or EM survey will potentially illustrate more targets for us, or better define the targets that we do have. We will also be releasing, we did some IP over some of our targets. So we did an orientation survey IP, so induced polarization survey over the Bend vein where we have the mineralization outcrop at surface, and then continue along a 2-kilometer fault. So we've done a bunch of IP over that. So we'll be doing a 3D inversion of that data set. We also did IP over the domino structure that we just recently drilled, that new zone just 2 kilometers to the west of Scottie. And we also did another survey, so we tested between Scottie and domino to see if there's anything in the mountain that we can see. So we did a gradient survey between those with IP to see if we can see any anomalous features in between the two targets there. So basically to find more evidence that there is a bigger system existing between Scottie and domino. And then we've continued with metallurgical testing of the tailings. So we've done a few different models of gravity separations to get the pyrrhotite and pyrite out of the ore. We've also done some cyanide leaching to see which extraction method is going to be most economic and most opportunistic to deal with these tailings to get as much gold out of the systems as we can. Next. So just last week, we released our first drill results from the season. So the first couple holes came back to us with one really exceptional result and a number of strong results to follow that. The big result for us was from the O zone. So we hit 109.4 grams a ton gold over 2.53 meters. Extremely excited about this. This was, lower on the O zone down in that main plunge control that we were testing. This is a 30-meter step up from the O zone. Where we had 4.18 grams per ton over 100, 4.18 meters over 100 grams per ton before up in the same structure. So we're looking like we're showing there's a lot of potential and legs here. Now the ozone had just minor production out of it back in the 1980s, just basically as the mine was shutting down, they had just pushed over the adits into the ozone and they stopped production at that point. So it's never been mined out. And the extension's never been really tested. They just ran out of drill holes, drill spacings that they could do from the underground pads that they were accessing it from. So we do have another couple of holes coming that we tested the ozone. So we hope to expand this later in the news cycle. We also tested the Blueberry vein, and we had some significant intercepts on that as well. So this is that near surface target. So this is open pittable. We got 2.05 grams over 44 meters, which includes 4.97 over 5 meters, and then another hit of 13.1 grams over a meter, as well as some Bend vein mineralization as well to extend that structure out. So feeling pretty confident about the drill results we've gotten so far, and really excited to see what we've got at Domino and other targets that we drilled through the season. So a total of over 45 holes this season. And we've just released the first 5 or 6 so far. Share structure for Scottie, we are at 120,000 or 20 million issued and outstanding. With all the warrants and options and everything, we're at 144. Now there is only 2 warrant holders in the company. There's a private family office in Switzerland, and then Eric Sprotz also holds 10 million shares with a 30-cent warrant there. Once we've paid all the summer bills for the drill program, we're going to be sitting on about $3 million in cash from the year. Feeling, going into next summer, we're going to have just about $3 million. The exercise of those warrants, which are all in the money right now, would generate another about $4 million. So $7 million if we just exercise the warrants on the table. And that'll basically supply us for next year if we wanted to have another substantial program like we did this year. Or if we look to expand it, we could raise a little bit of money. and go much bigger than what we have right now. We've got substantial investors like Eric Sprott. We've got these family offices, and then Brad himself owns 10% of the company. So there's a lot of skin in the game for the board and management here at Scottie. That's about it for us. Just looking for some questions or feedback there, David.
Okay, thanks a lot, Thomas, for that. Brad's power went out right as the presentation started, so great job doing that. Sticking with the cash issue, is there any plans to maybe do a flow-through raise?
I mean, Brad's the person to talk to on that,
right.
Obviously. I think basically we're waiting for the news flow to come through here to see what it does to our stock price and puts us where we're at. Just to kind of summarize what our drill results are before we're going to look at what we're actually going to finance for this year. We'd be open to a lot of different financing models to keep this project going. We see a lot of success here, and flow through is definitely a tool that we've used in the past.
Great. I got a question here from a listener. Is there a plan to issue an updated resource estimate?
Not at this time. We've got so many targets. We've got Blueberry Bend, Scottie just from last year with all exceptional results. We've got drill results coming for Domino. We've tested the 6 ounce zone. We've got about 4 or 5 zones that have extremely high grades on them. We're just trying to figure out what the best pathway is to go ahead to drill off something like this. So we're looking at, where do you put your meters and to show the best value to the shareholders. So at this point, we're not targeting a resource. We're primarily targeting a pathway to show a multi-million ounce potential. So stepping out and figuring out which direction basically you would want to infill a resource to. The historic resource at Scottie, there's a few of them, but they're between 60 and about 100,000 ounces. So a very small resource there in terms of historic modeling, although it's at very high grades, about 0.5 ounce per ton for the historic resource. But we're looking to show a much larger pathway here. So at this point, we're just kind of stepping out different zones, figuring out which way you would want to drill this off in the future.
Okay. And another question, how soon for Domino Hill results?
I'm expecting them in the next few weeks. The lab is playing a lot of games. Basically, the things are extremely slow in the labs in Canada right now. The results are just trickling in. It took us a while to assemble the first 6 holes that we released, and I just don't have a concrete deadline on when the next holes that are going to come out. We've submitted all the holes by September 15th, but basically things are just tripling in. Our turnaround time is over double what we were expecting at this point, and I don't know when we'll actually get them, but I'm expecting Domino drill results in the next few weeks. The first holes at least.
Join the club. I know labs are backed up all over the place, so I know that's been a big issue. Here's another question. What are the capital needs to require the reopen of the mill and possible time frame? I know it's probably another question for Brad.
Well, I mean, we're an exploration company. Obviously, we had looked at the mill and saw what was there. Right now, the mine permit for Scottie is a 75,000 ton a year, so that's about a 500 ton per day, and that's what the mill was built for. Brad's had a couple engineers go in prior to my involvement in the project, and they've looked at the mill, and basically it's functional. It looks rusty and old to me. But they've said basically at this point, with such a small tonnage mill, you'd probably just want to replace the entire mill instead of refurbing this one. And so like refurbing it, I've heard between $1 million and $2 million to refurb it, and you can buy a new one for in the order of $3 million to refurb that.
And I know we discussed this before the broadcast started. What's kind of like the end game of the company? And the big reason why I'm invested in the company and what I saw the potential was the big, huge land package in the district. You've got the Pretium mine there. You've got the Premier mine there that SCOT has. You've got Red Mountain, and you've got your land package, which is strategically located there. I envision looking at grades of SCOT and seeing what they're doing over there. I envision maybe a major eventually coming in and tying up that entire district. So what are your plans are not to go into production, right? I mean, your plans are basically to prove up a resource and maybe have a situation where a major or mid-tier comes along and buys you out. So I know the Brad is heavily aligned with shareholders, and management owns what, 12%. So what is your like drop dead price? I mean, what's the like I won't sell at any price type of situation?
Yeah, I mean, like you mentioned before in your presentation, basically we're at the start of a bull run. I don't think we have an idea, but we don't have a drop dead price right now. One of my favorite things about Scottie in itself is that it's got a lot of optionality in terms of what we can do with Scottie. You've got Pretium to the north. Pretium is almost a tier 1 asset, one of the few, that's somewhat available on the market right now. With a little bit of land consolidation around it, I mean, that would be an exceptional district scale piece of property. So any major that's going to come in and take Pretium, I think would do well to look at us as well. There was talk at one point about Pretium actually pushing the road in from the south up through our project instead of over the glaciers like they do from the west. Mm-hmm. Pretium actually ships concentrate out of Stewart at the moment. So their trucks drive from Pretium all the way down to Stewart and then backhaul empty up to Pretium themselves. So I mean, Pretium is definitely an option on somebody that could take us out, or somebody like buys Pretium could take us out. As I mentioned before, SCOT's got a hub and spoke model. They've got a 2,800 ton per day mill. The historic resource on our property is twice the grades of any of their mines that are going to be producing. We are 30 kilometers by road that exists now. I mean, you can drive it right now to SCOT. I mean, SCOT's a natural as well, but I mean, they're busy, and they've been busy for the last few years, proving up their resources and basically arranging financing to turn on their mill. And I mean, we've heard that 18 months from now, they're going to be processing ore in SCOT. We've also got this small mine permit. If anybody wanted to come in and start up something small and quick and then expand that out from there, we'd be another target for that. I don't think we just like the optionality of all these, we suit a lot of different players that would come into this, and I think that gives us an advantage. We're not a one trick pony in terms of what they look like. Our main plan right now isn't, we're doing this and then we're selling it here. We'll just basically play it along. We don't have a defined end goal of what we're going to do. We have no interest in being a producing mine. I can say that. We are a pure exploration company. And our primary goal right now is just showing a pathway to multi-million ounce potential, or at least 1 million ounces. That really checks that box for any major that wants to come in here. Once we hit a pathway to over 1 million ounces, then we'll start looking at doing infill drilling to start proving up a resource to that. And so, just kind of sequentially down that exploration play, and we'll look at options in terms of buyouts at any point along there, as long as they make sense for our shareholders.
Mm-hmm. Right, great. And I know it's really expensive to drill up there in the Golden Triangle. What is your average cost per meter, all in?
So if you asked me that last year, it was just over $500 a meter. We are road accessible for some of our targets, so about a third. But this year we've actually realized there's some substantial economies of scale when we upped our drill program, and we've dropped it down to below 400. So some of our advantages for that, which is very low compared to other projects in the Golden Triangle. So we can drive to our camp, and so we can access a lot of our drill programs are done with a skid-based drill. So we're not using a helicopter. So about a third of our drilling is done with a skid-based drill. And having a helicopter on site this year and operating 2 rigs turned out to be quite economic. So we see that if we're going to do any drill programs in the future, we're going to definitely have multiple drills at the same time, because that reduced our costs substantially. But we're not actually that far from the road. So staging for our drilling is quite close. So it's short bumps with the helicopter, like usually 6 minutes, and we're there and back to the drill. So it's more about firing up the machine and going and coming back than it is that big distance and cost with the helicopter. So we were pretty happy. We came just under $400 a meter this year.
Yeah, that is on the lower end for that district. So like you said, if all the warrants were exercised, and that would be Eric Sprott's warrants, and he would own around 19.9% of the company if that took place, right?
I don't know the total number. I know it's under 20%.
Mm-hmm.
I think he's just about 9.9 right now, and I'm not sure what that brings him up to once he exercises them. But yeah, it would be in that order. It'd be between 10 and 20%.
And he's expressed interest in whatever financings you do in the future of keeping that that level of percentage interest in the company.
Yeah, he's basically, he's following drill results just as we're following drill results to manage his expectations in terms of what his investments are. But he has, there's some talk that, if things continue well, then yeah, he'd want to be a future shareholder as well and continue with that expansion.
Okay. Has there been any interest, any strategic interest from any majors? Have you signed any CAs? Have you had any interest lately?
Yeah, with mid-tier producers, we've had a number of CAs with them. So that seems to be the people that are looking at us the hardest right now are mid-tier producers. Had a lot of interest in that over the last, I guess since the season started, basically we've been having more and more serious talks with mid-tier producers about the potential of Scottie.
Mm-hmm. And you haven't had any COVID issues up there at all?
No, it was surprising. So to get to our project, we actually had to drive through the United States. So that we had to go through the Stewart-Hyder border crossing to get into the States, and the border was quite easy in going this year in terms of we just had to basically let them know in advance that we were coming through, and then we get up to camp. I mean, we felt pretty safe up there, pretty restricted, mostly just travel to and from with the biggest issues and our impact on the town, but. No big COVID issues. It wasn't a major cost to us. We followed the government's COVID protocols, and everything seemed to work out pretty well for us that time. We're anticipating that we're going to have to do similar things next year, but we'll see what the scope is for that.
Right. So when will the season wrap up there?
The season, so the drilling's completed. We submitted all our lab results from that. I'm going to be heading up in the next couple of weeks. So once we have more drill results in, we'll go up and pull out those piles of core that we drilled and the successes we had, and just kind of go back and look at that. But the field work is largely done now. It's more of a data exercise now and planning for next season and releasing results.
Okay. And you probably haven't even thought about what your budget's going to be like next year. And it sounds like you said you're probably going to have around 7 million. So probably be around a 5 million program that you can do next year. And even if you raise some flow through, maybe you can kick that up a little bit.
Well, so we spent 3.5 this year on our program. So that was 7,000 meters. And we did the EM and the IP surveys, and we did a bunch of groundwork as well. If we have comparable grades to what we did with our 2,000 meter program, and with all indications we are seeing already with our first result, I think we'd up that substantially. So I mean, I could put together a program right now that burns that full $7 million and successfully advance the project. One of the challenges with the labs being so slow as they are, is we were drilling targets at the start of this year that we were expecting results at the end of the season so we could follow up on them. And so that was kind of a limiting factor for us in terms of, you found this target, you've stepped out past it, you need those results back to see if you're on the right track or not, like that. With this many targets that we have now, we could propose a lot of different drill holes to expand the resource out around that. So I can see us substantially increasing the meterage next year if we're successful as we think we're going to be.
Okay. Well, I haven't gotten any more questions from anybody else here, so I guess I'm just going to have to keep asking questions on my own. Basically, you said that you're not planning on putting out you don't have plans to put out an updated resource yet. How much information would you like to have before you do that? I mean, is there a targeted ounce? Oh, it looks like we have 1 million ounces now. Maybe we should put out an updated resource. Or it looks like we have close to 1.5 million ounces. Maybe we should put out an updated resource. You got any plans?
If I can see a straightforward path to 1 million plus ounces, then I'm going to start doing infill drilling to start showing that resource as quick as we can. That would be the model that we'd be looking at this point. Yeah.
Okay. Yeah, I mean, I really don't have any more questions. I mean, I've had a few from the audience, and I think that we should probably just wrap this up.
Great. Thanks, David.
Thank you. Hey, thanks a lot for everybody. Thanks a lot everybody for sending your questions and to taking the time to log into this. I mean, I know you have a lot of choices out there, webinars to listen to and to watch, and we really appreciate your attendance. Thanks a lot.
Thanks, guys. Thanks for attending.